Now, the Central Bank of Eswatini says the overall liquidity position of banks amounted to 7 billion linjeni at the end of August of 2022, which is higher by 8.9% from the previous month and lower by 5.6% year-on-year. This was mentioned in the Central Bank of Eswatini's monthly statistical statement released on Monday. The Central Bank of Eswatini said the month-on-month growth was on account of an increase in the bank's balances held with the central bank, cash holdings in tills, as well as investments in government securities. Consequently, the bank's liquidity ratio rose to 34.8% at the end of August, from 32.3% in July of 2022. Now, economists say this results from excess liquidity. Generally, market interest rates would remain low. This means that it is cheaper for companies and people to borrow money, thus helping the economy recover from the financial and economic crisis and allowing the banking system to build up liquidity buffers. Thembinkosi Dube, economist and consultant in Swaziland, joins me to unpack this. Good to see you, Dube. And now, the central bank says the overall liquidity was higher than in previous month. Break it down. What effect does this have on the markets?
Thank you for calling me and discussing this issue. Well, I think one of the important things that we need to understand about our economy is that it's mostly linked to the South African economy, maybe because of the trade agreements that we have and also due to the common monetary area. So there are some things that we do as a country that are linked to South Africa. For instance, we can't have a gap that's a little bit wide in terms of the interest rate because we are linked with that country, and there's quite a number of financial institutions that are here in the country that are from South Africa. Back to your question on liquidity. Excess liquidity, it goes back to the issue of the monetary control or the monetary, what they call the monetary policy. The rise in excess liquidity does affect the strength or the monetary policy in terms of raising and lowering the interest rate in whatever they do. But what we know is that we have seen a rise in interest rate in the past quarter, I think from 3.75%, and now we're at 6%. Whilst that might look low from other sides of Africa, for us, this has been a rise. Seriously, it has been a rise for people. They have to pay more for loans and for whatever they have, and a higher rate in terms of savings.
Well, now it looks it's making sense for some now. Getting this from you, perhaps let's stretch it and talk more about the effects of excess liquidity on the markets and also the citizens and their finances.
Thank you. I'll start with the citizens. I'll say maybe there is little, but I want you to, the fact hinges on the issue of the reliance on South Africa or the link between the two. So if we're talking, the assumption from the economist's perspective is that when there is excess liquidity, the interest rates will be kept low, such that people will borrow money to do whatever they do. But we've seen a rise due to inflation, and we might say the rates may be kept low for some time, but the issue of inflation is more stronger, it's more of a concern as opposed to the excess liquidity. So it affects the consumers. I'll say this is that is affecting them, but for the businesses, there is an effect. Show the advantage of low interest rate, but we have seen a rise. The rise has had an effect on people going to apply for loans because it's now more expensive than it was in the past 3 months. So we are in that kind of a dilemma of what has to be addressed. Is it inflation or you have to address the issue of the excess liquidity. So it's a tie for the policymakers, of which they have to prioritize what is more important and what will be more convenient for the country and the region.
And quickly, before I let you go now, do the people understand that the economy of their country is tied to the not too steady or not so steady South African economy?
We are 100% aware of that, more especially because the rand, the South African rand, is a currency that trades in our local market. It's a legal tender, so we use it. So we are aware that we are 100% linked, not really 100%, but our economy hinges on the South African economy. For most of their decisions that they do, we also have to adjust on that. So we are aware of that. Though the South African economy looks unstable, maybe from the global perspective, but we are benefiting from some of the policies that they implement, which tend to give us a steady economy that has been able to adjust to the over the global market fluctuations. So for us, actually, at the present time, it's working for our good.
Well, Thembinkosi Dube, many thanks for speaking with us.
Thank you.